focus on what matters.
Welcome to an Axios virtual event, Expanding the Financial Field. I'm Mike Allen, a co-founder of Axios, coming to you from Axios HQ in Arlington, Virginia. Welcome to our audiences on Facebook, YouTube, Twitter, LinkedIn, and Axios.com. We'd love for you to join the conversation on Twitter at Axios, #Axios Events. I'll be joined by my colleague, Axios Executive Editor, Asia Whitaker Moore. And we'll be talking today about economic opportunity and financial inclusion, and people who've been left out of the system. Our first guest is Senator Tim Scott, Republican of South Carolina. Senator, you're on the banking, finance, and small business and entrepreneurship committees, so we're for sure in your wheelhouse. Senator Scott, welcome to Axios.
Absolutely. Thank you for having me, Mike. Good to see you again.
So, Senator, you were early on the idea of financial literacy, calling it out, promoting it, talking about why it's important. What put you onto that?
Well, as a kid who was raised in a single-parent household mired in poverty, I got to tell you that the issue of financial literacy is something that I wish I would have understood earlier in life. It was really in my 20s before I started really understanding and appreciating that what you look like on paper might be more important than what you look like in person. And so financial literacy has so much to do with your future success and your present opportunities. And having not learned those lessons early in life, I wanted to make sure that a part of my focus is on making sure that Americans today, no matter what their income, they have access to financial literacy. And frankly, the more you find yourselves in marginalized communities, the more important financial literacy really is.
Senator, there's a lot of conversation about financial inclusion. What can the U.S. government do or should do to promote financial inclusion?
Well, the opportunity to focus on financial inclusion is something that we've done legislatively. I think there are remedies that really levels the playing field without reversing discrimination in any way, shape, or form. We focus on financial inclusion, for an example, for our veterans who put their lives on the line, oftentimes find themselves at a disadvantage when it comes to loans and access to credit. We think about those folks who today are credit worthy, but they are credit invisible. So we want to make sure that more of your information finds itself into the credit scoring agency's hands, so that if you're credit worthy, you have access to more products within the portfolio because you've earned it. And so we want to help those who are credit worthy have more access to opportunities. And so financial inclusion is really about those who should have access to lower interest rates and better terms get that opportunity without any question.
And Senator, you've lived this as both someone you point out grew up with a single parent and also started your own business.
Absolutely. There's no doubt, Mike, that the truth is that had it not been for financial literacy in my early 30s, I would not have been able to start that business. I remember walking into a bank and asking for the manager to believe in my dream, to believe in my vision, to look at my work that I've done in the insurance business and give me a chance to own my own agency. And one of his first questions was, "What's your credit score?" And I started talking about lots of things. He said, "What are your assets?" And when I said that my asset was a 9-year-old car with 253,000 miles on it, he was like, "Seriously, dude, that's not an asset." He didn't say those words, but I think that's what he meant, because he smiled a lot, and then he walked me through the importance of being credit worthy, and my credit score was decent, didn't have the assets, but he helped me understand the importance. And then I had a couple of small business owners who are mentors who also injected into that situation hope through an investment in my business that got me started, and then the bank came back to the table. So it's so important to have healthy relationships and a healthy relationship with a financial institution so that your dreams have a better chance of becoming true.
And Senator, you recently did something that's rarely done in Washington. You got 50 members of your own party on a bill. That is something that is rarely seen in science.
Yes, working on behalf of everyday folks, if you think about the three letters you never want to see in your mailbox, it's the IRS. And having more letters delivered to more mailboxes because of the new reporting requirements coming from the IRS to your financial institutions, I wanted to preemptively make that an impossibility, getting 50 Republicans on in about 24 hours, and then talking to a few of my colleagues on the other side. We were able to get that part of this taxing and spending bill out of it, and that was really good news. I hope it stays out. It also sends a negative message to 7 million unbanked Americans who would be in fear that getting involved in the financial institutions of this country makes you more likely to be audited. That is a scary proposition and something that would actually reduce our reliance on our banking system. And so eliminating that with all 50 Republicans and a couple of my friends on the other side, I think will actually encourage those 7 million people to look for a way to get involved in our financial institutions.
And Senator, you mentioned unbanked people, and I've heard you talk a lot about that over the years. When you go home, that's a very real issue in South Carolina.
Yeah, Mike, I tell you what, the percentage of South Carolinians who are unbanked is around 16, 17%. That means nearly 1 out of every 5 South Carolinians do not have a good relationship or any relationship with a financial institution. That means that they're using cash to transact their business. That A, could be dangerous, and B, means that they're not able to avail themselves to the entire portfolio that might be available at their financial institution. So we want to find ways to encourage that credit invisible or those who are unbanked to become a part of the system so that they and their kids get to benefit from the excellent opportunities that are afforded to people who have that relationship. And we saw that, frankly, Mike, during the pandemic, that having a relationship with your financial institution, especially as small businesses, was really important to getting your PPP loan approved and then forgiven in record time.
And Senator, I think there's a lot of people, including maybe some of our guests today, who don't realize that there are Americans who are basically excluded from the global financial system. But that's something that you're very familiar with.
I've lived that reality of being outside of the financial systems for probably half of my life almost. The older I get, the harder it is to say that, of course. But I will say this, that for millions of Americans around our country who need more help, need more resources, need more access to loans and opportunities, it is imperative upon us in the positions that we hold to make it easier for those who are credit worthy to get the credit they need. You think about home ownership and the disparities between the races. One of the ways that we bridge that gap is not by extending loans to people who cannot afford it, but helping those who can be a part of the system and helping those who have been repaying their rent on time and their electric bill on time and their cell phone on time. That information should be scored by the credit agencies, the credit scoring agencies. And when that happens, you have more people who have the beauty of experiencing the American dream, building equity in their largest asset, their homes, and closing the wealth gap. That erases a lot of the ills of society in and of itself. And so we're going to continue to work hard on that topic.
Senator, I have to ask you on behalf of our audience for a very practical tip. If I want to improve my credit standing, if I'm a young person who's maybe entering the workforce or a young entrepreneur, what's one of the biggest things, clearest things, simplest things that I can do to make myself more credit visible?
Well, one of the things that you can do to make yourself more credit visible, number one, is get a copy of your credit report. One of the things I started with when I was a youngster was I got a copy of my FICO score so I would understand A, what's being reported, B, if it is it accurate, and C, how can I change it. Really important first step is knowing where you are. The second step is then evaluating your need for credit. If you have high credit limits, whether that's $500 or $50,000, the closer you are to your credit limit, the worse your score will be. The more open accounts you have with lots of credit access, it can also have a negative impact on your credit score. So, and of course, pay your bills on time, including your student loans, because sometimes you think your loans are grants and they're not, so they need to be paid. And so just making sure that you are as disciplined on that 30-day cycle as humanly possible. Sometimes you have too much month left at the end of the money, and that can make it hard. So we need to do those things that are within our control.
That's a good tweet right there, Senator. And as we say goodbye, you have a little expression that I think will be encouraging to the people who are watching this and learning from this. And that is when we were miking up based on the recent election results, I said to you, it's a great time to be a Republican. And you said to me,
it's a better time to be an American. And I think the goal we should have is to focus on making progress by prioritizing what the American people need, not Republicans or Democrats. I'm far more interested in being a happy warrior, and happy warriors get things done. And so that's my goal. My goal is to be a happy warrior and think more about the American people than I do partisan politics.
And Senator, piece of life advice that I liked when you said, it's always a good time to be yourself.
Oh, yeah, I said happy warrior, but yeah, I do think that's really important. By the way, Mike, as we end, it's always a good time to be yourself. It's, winning in Virginia was a big deal for lots of Republicans, and that's a good thing, but it's always a good time to just be comfortable in your own skin. Doing so gives you deference towards other people, allows you to sincerely and authentically fight for the things that you believe in. And frankly, the more comfortable you are in your own skin, the more likely you are to listen to others who are not like you. Because if you're comfortable, you know that you're flawed as well. So having a chance to have honest conversations in the public forum will make our country stronger and more resilient from my perspective.
Senator Scott, thank you for sharing your thoughts with Axios.
Thanks for having me, Mike. I look forward to seeing you again sometime soon, I hope.
Thank you very much, Senator. And now we're going to head over to my colleague, Axios Vice President, Abby Clausen.
Thanks, Mike. Now joining us from Chicago, Illinois, is Chris Cartwright, President and CEO of Transunion, who is the sponsor of this event. Hi, Chris.
Hi, Abby. It's nice to be here.
So there are 60 million Americans with thin or non-existent credit files. Why is that? And how can we elevate them to become full participants in the financial ecosystem?
Well, it's a great question, Abby, and I think maybe we should start with the basics. First, in the U.S., we have one of the most evolved and sophisticated credit reporting systems in the world, and the bureaus are able to score over 200 million U.S. adults reliably. And we do it based on the data that we receive on a monthly basis from lending institutions across the country of all different types. These could be a full-service bank, a mortgage lender, an auto lender, an online consumer lender of various stripes. Over 90,000 lenders in the U.S. regularly report to the credit reporting agencies, and we take all of that data about the loans that exist, the consumers who have those loans, the terms of the loans, and the payment behaviors, and we can create reports from that, and credit scores, which is a type of an analytic that expresses a consumer's ability to service debt, particularly the next available loan. Now, that said, there's still upwards of 60 million adults who, for a variety of reasons, have never had a loan, or maybe haven't had a loan recently. And so there's not enough data on the credit archive for us to compute a score and for those individuals to qualify for a loan. Now, that doesn't mean that these aren't responsible adults who are capable of borrowing money and repaying in accordance to terms. In fact, many of those Americans are regularly paying rent bills or utilities or a telecommunications bill, et cetera. And all of that bill payment behavior is indicative of good personal financial management and the ability to take loans and to repay debt. In fact, somebody who's renting their home or apartment, they might actually save money if they could purchase it, right? But we need to have information like rent and utilities and others in order to include more Americans in this modern financial system.
So all of that data that's being collected actually does benefit the consumer.
Well, it certainly could if we could get contributions of, what we call alternative data, which would include, the rent, the utilities, certain types of payday loans, et cetera, and add it to the mainstream credit archive. That would help us score these 60 million Americans who currently don't have a score and will thus have more difficulty in accessing loans that help them get the things they're looking for to improve the quality of their lives.
We're here to talk about expanding financial inclusion. What role does TransUnion play in determining creditworthiness?
Well, Abby, look, it's a great question, and we believe that we're at the center of this. The traditional role of the credit bureau was to accumulate information from all the banks in a geography in the U.S. in this case about the loans that are in existence to various consumers, the terms of those loans, and of course the payment histories. And from that, we can produce reports of lender repayment experience and also analyze the information to produce a score. And the score is really used to assess a consumer's financial performance and ability to take on more credit. And it's an incredibly, powerful repository of credit information, and it's the foundation for so much commerce in our economy. That said, there are other forms of information that are really important indicators of a consumer's financial management practices, if you will, that currently aren't on the bureaus and aren't taken into account. I think rent's one of the best examples of this. A rent bill is one of the largest bills a renter pays each month. And I think that they should get credit on their credit reports for consistent repayment. In fact, that can position them to get a mortgage, which ultimately could save them money over their rent payment, but also help them start building value in an asset over time. A huge source of wealth creation over time for Americans. But utility payments are also extremely important, and telecommunications payments. And so there are a variety of kind of non-loan financial activity that we believe should be included in the modern credit reporting system in order to expand access to that system for the tens of millions of Americans who currently don't have it.
Absolutely. And what's next for the credit reporting industry? What trends and innovations are you following? And how do you see this space growing and working to expand financial inclusion in the future?
Yeah, there's been a lot of growth in recent years across the credit reporting industry, and it's really being driven by the appetite for data from businesses and government to understand who they're dealing with and to have an accurate picture of those individuals. But there's an important flip side as well. Consumers, as they engage in the modern economy, which, as we all know, is increasingly digitally driven, they want to bring the full complement of data about their behavior, their personal financial characteristics, if you will, so they are completely and fairly represented. This is true for all consumers, but it's particularly important for underrepresented populations that haven't had the same access historically to lending as others.
Well, I hope that we do get to a place where there is more inclusion in our financial institutions. And it seems like TransUnion is working for that as well. So thank you, Chris, for joining us and Axios in this discussion today.
Yeah, thank you, Abby. And listen, I'm an optimist. We are on an encouraging trend of, increasing access to information and helping more consumers participate in the economy. And I'm confident in the partnership that we have with government in order to achieve that.
That's great. And we want to thank Transunion for making this broader conversation possible. Now to my colleague, Asia Whitaker-Moore.
Thanks, Abby. I'm Asia Whitaker-Moore, Executive Editor at Axios. And our final guest is the President and CEO of Women's World Banking, Mary Ellen Iskenderian, joining us from Boston, Massachusetts. Hi, Mary.
Hi, Asia. Great to see you again.
Thank you for joining us. So I guess we should kick things off and talk a little bit about why we're here. So after more than a year of really unprecedented global challenges related to the pandemic, both the public and private sectors are rethinking equitable economic growth, and we're facing a widening divide in economic opportunity, uneven access to digital technology, both at home and abroad. So maybe we can start off by talking about who this is impacting, who's being excluded the most, and does it make sense to target those people who are furthest outside the tent or those that are the easiest to reach?
Well, that's a great question, but I do think one of the really seminal, important takeaways from this last year and throughout 2020 and then again into this year was just how women in every geography, every age, every economic segment have really been disproportionately affected by both the health aspect of the pandemic, given that they were disproportionately represented in frontline workers, but also in the economic part of the pandemic. We saw unemployment rates across the globe 2 percentage points higher everywhere for women than for men.
And maybe you can talk a little bit about, I think one of the bright spots is that there's been a lot of female entrepreneurship, small businesses starting up in the pandemic and even prior to that. But women are still struggling to gain equal access to the same kind of financial resources, investments, opportunities. So how do you think about reaching women specifically and overcoming some of the challenges they've had there?
So I think for us, where our engagement is really around getting the nearly 1 billion women who are completely cut out of the formal financial system included. And we see one of the really bright spots, one of the silver linings perhaps of the global pandemic has been the fact that so many governments have targeted global relief payments to women, around women, and they've done so digitally. So you've seen this real rush of women who, again, were really sort of denied access to both the technology and this increasing growth in digital financial services. You've seen them finally getting access, to cell phone technology and to financial resources that are delivered that way. And the digital space is really starting to pay off for women. You're seeing many more women take advantage of, digital commerce, working through existing digital platforms. It's a way to sort of work from home, but to reach a much broader audience. So you're really seeing digital start to pay off for women, particularly now that they're gaining greater access to the technology.
That's, I think, a really important point. And maybe you could talk a little bit about, now that we're seeing, a rush to adoption, how, financial literacy and digital literacy plays into people's ability to actually access these technologies and use them, to their fullest capabilities.
I love that you put those two together because they really are increasingly the different sides of the same coin, if you will, that so much of financial inclusion, financial outreach to underserved populations today is being done through cell phone technology. But still, we've got a 15% gender gap in ownership of smartphones in particular, so internet access. Now, that's actually a good number. It's the first reduction that we've seen since we've been collecting that data, but it really will only fulfill its potential, women's access to that technology, if they know how to use it, if they feel confident using it. So it's really no longer enough to say, do you know how to budget? Do you understand compound interest? Sort of some of the traditional financial literacy topics. You've got to add that digital literacy so that women feel confident and feel they've got the skills and the knowledge that they need to really use that technology that they're now finally getting access to.
And when you think about some of the creative solutions that you've seen take hold in the private sector, over the past year or even beyond that, what are some of the things that you think have the most, lasting impact? What's working?
So I think I divide my answer into two groups. First, I think you've started to really see amongst some of the corporate sector the real recognition that if we don't deal with women's caregiving responsibilities, it's the number one reason cited by both women and men for not going back to the workforce. If you don't, and some companies have really started to understand how important caregiving is going to be to economic growth, economic recovery. So I'd say there's that one really important piece that corporates, I think, are being quite responsive to. The other, I'd say, specifically relates to the idea of technology and finance, i.e. fintech. And while I'm sorry and disappointed that fintech as a sector itself still doesn't have as many women founders as it should, only 14% of fintech companies even have a one woman on their board, they can really address so many of the barriers. The data analytics that they have at their fingertips allows for alternative credit scoring. So you're starting to see an expansion of credit to women entrepreneurs that may not have had it. You're seeing sort of easier processes, more fun processes, lots of games that have come up both in the financial literacy space and in access to finance, reaching down into youth, both boys and girls as well as adults, are enjoying learning more about the financial system through digital technology. A lot of these companies aren't regulated yet, so they can get things done faster and more nimbly and make some really exciting shifts to reach these populations that have just been left out of the formal financial system up till now.
Yeah, it's interesting you mentioned, kind of what companies are thinking and the importance of the care economy. I think there's been some intersection there between, the public and private sector there. So is there anything that you would point to as far as the new or the Biden administration as to any partnership that you're seeing moving forward on these issues related to financial inclusion or the care economy that you think are worth noting?
Well, I think it was really important. You probably saw that the administration's Gender Policy Council released its first plan. In fact, it's the first gender plan that the United States has released, and we were really heartened to see a clear understanding of the linkage between women's participation in the economy and in the workforce as being vital to economic recovery and economic growth, but that being so linked to caregiving. And then, the issue that we're so deeply engaged in, recognizing the further link to financial services, and that not all women are entrepreneurs, and that every woman needs a safe place to save, insurance to mitigate risks, the ability to have a safety net underneath her so that she can take the risk. She could borrow to take advantage of an opportunity. She needs long-term pension savings and retirement savings. So there's a recognition, I thought, by the administration of the interlinked nature of women's participation in the economy and economic growth, and then what financial services are needed to help get them there.
Great. And I think probably one question that lingers and always comes up in these kind of conversations is that we focus on digital technologies and then still have to acknowledge that there's a large segment of people who still, are not active in the digital world. And how do we reach those people? So what are, the strategies there that you think are still, viable and the best way to meet people kind of where they are?
Yeah. Well, I do think that that's so closely linked to the financial and digital literacy, as I was saying, that when women in particular talk about what they want from a financial service provider, it's always about, I want to be safe. I want my money to be safe. I want it to be confidential. I don't want everybody to know what I'm saving or that I'm saving. And so I think once they express those desires, that what they're looking for in a financial service, and then you explain all of that really is so much more available and readily available through digital financial services. It's fascinating how quickly that shift can take place. You're seeing financial inclusion in a lot of regions around the world being driven by digital as opposed to the traditional cash-based financial services.
Well, thank you, Mary, for helping us move this conversation forward. Thank you, Mary Ellen Iskenderian, for joining Axios. And I think we had a great conversation. So thank you.
Thank you.
Thank you all for joining us this afternoon for another virtual conversation that has made everyone smarter, faster. For more information or to sign up for the Axios Pro Rata, Markets, or Closer newsletters, visit axios.com/newsletters or the Axios app. Thank you all for joining, and we'll see you all on axios.com.